Hello, everyone. Welcome to Community CPA's webinar. My name is Catherine Tran, and today we are talking about some very common questions that a lot of our clients come to us about, which is related to entity formations for their business. So when people are thinking about starting a business, or even if they already have a business, but might be wondering like, oh, what are the advantages and disadvantages of some of these types of business entities? Can it help me with my taxes? These are some of the considerations that we often get. So that is what we'll be discussing today. A bit about our firm. Community CPA is a full-service accounting firm. We're regional based in our core is based in the Midwest. So we have a branch in Des Moines, Iowa City, and Minneapolis, and then we also have a branch out in the West Coast. Our CEO and managing partner is Ying Sa, as is here on this slide. She has served in the past in the National Taxpayer Advocacy Panel and Advisory Committee to the IRS. So she always has a passion for serving people, helping people understand and navigate taxes. And she continues with that interest today. So feel free to reach out to her. You can also get her book on Amazon, and she has a new book coming out, Appointment with Ying at 10 a.m. So her first book, her 8 a.m. book, was related to the startup of a business. So some of these questions that we're going to go over today, a lot of them will be included in some ways in her book. Hers is very much story-based, but her 10 a.m. will be about growing a business. So if you are in that phase where you want to expand and grow, please keep in touch. We'll let you know when our book comes out. No responsibility disclaimer. So we just want to let everybody know that please take what you hear here with a grain of salt. We, of course, try to provide good and valuable content, but please do your own research and take responsibility for actions that you take based on this webinar. Should you decide to engage in Community CPAs as a client, then we would, of course, love to serve you. And today we are here with Dan Kim, who is a partner at the firm. And so if you do want to engage in our services, he is the best person to reach out to. He is the partner at the firm and the director of client services. And he will be answering these questions. He works a lot with the business formations and entity elections. So
hello.
Welcome, Dan.
Thank you for having me, Catherine.
Yes.
It's good to be here again and seeing all of our followers. And I know today's topic is something that I deal with all the time. So I'm happy to help answer questions. If I don't keep track of the chat, feel free to let me know, Catherine. And we can also discuss those. But yeah, I'm here to help. So fire away with those questions and we'll see what we can get to today.
All right. So of course, one of the general question is, what are the common types of business entities? So if you are wanting to start a business, but you might not even know what's available, Dan, what are the different common types?
There are many types, but the most common 4 types of entity structures are sole proprietorship, LLC, S-Corp, and C-Corp. So those are the 4 most common ones.
Okay, so when you mentioned the sole proprietor, how does that work? Like do I form one? Is it like a formal process that I have to go to?
Sole proprietorship is actually probably most common. I want to say most common because a lot of people without knowing they have a sole prop, get themselves into one because you don't even need to formally create one. You can just receive an income, receive a 1099, do a job for someone or sell something, receive a 1099 and later realize you are a sole proprietor, because sole proprietor entities, you don't need to register anywhere. You just can go off of your name and your social. And so a lot of times that is what we typically see, sole proprietorship businesses as a new startup business.
Okay, and so where would they put that on their taxes then, if it's part of their personal?
Yes, so sole proprietorship business goes and falls under Schedule C form. Schedule C form of your 1040 personal taxes. So it's very intermingled. It's very, together with your personal. So I see this next question. Can I apply for an EIN or get a DBA to separate that out of your personal? The answer is no. So even if you get an EIN, that will still be part of your personal taxes, okay? You can get a DBA, like registering one with the state, right? That's, in some situations, you can register one with your city in the place that you're doing business. But that doesn't change the fact that it is a sole proprietorship business, and then it's tied to your personal taxes. And so everything is still tied closely with your personal taxes, with or without a separate EIN and a DBA. So.
Okay, so then is this a disadvantage in terms of having a business, and what are some of the disadvantages of this type?
Yes, actually, disadvantages are many, right? So a lot of times when we come across the multitude of sole proprietorship businesses that people get themselves in, we automatically ask them if they are serious about that business and if they plan to continue to grow that business and pursue that business. And so if the answer is yes, then we try to tell them to create an LLC, create a C Corp, create a S Corp, right? Separate that business activity outside of your personal social. So you don't take responsibility. You're not legally liable directly as a person, but you have an entity structure to protect you if there are any chances of, mishap or any legal issues against the business, and you want to help separate yourself from the business. And that's why many people create, these other types of businesses like LLC, C Corp, and S Corp. And we'll go into this probably in another session, but a lot of Schedule C sole proprietorship businesses get audited, just because they are the most unfamiliar, new to business type of folks. IRS do keep a closer eye on sole proprietor businesses and Schedule Cs. And so you want to make sure to separate that out and to keep business separate from your personal. So that would be our advice when discussing disadvantages of a sole proprietorship. So it's not recommended at all.
All right. So you mentioned the LLC then, is that a type of tax filing?
Yes, LLC is a legal structure. And a lot of times you'll hear me talking back and forth between legal structure and tax structure. But LLC is like a legal structure. And branching off of the LLC, there are mainly two different types of tax structures by default can be created. One is a single member LLC. One is a multi-member LLC. So if you do have just one owner of an LLC as a single member LLC, even though your legal entity structure is an LLC, You will be treated as a sole proprietor business in tax world. So remember, just because you're an LLC doesn't necessarily mean you've separated your business completely from you. If you're a one-member owner of an LLC, it's still going to fall under your personal taxes. It's still going to be tied to your social. It's still going to be tied to you as a person. So just keep that in mind. So, when you are doing your taxes, you'll realize, oh, I thought I was going to file my business separate, and they'll tell you, no, you're a single member LLC. You'll file that all together. Oh, Catherine, I think you're muted.
Sorry about that. So when you're thinking about having other partners in the LLC, what can you tell us a bit more about that? What is an MMLLC and what is Form 1065?
Right. So this is the other type of LLC I mentioned earlier. Earlier it was the one owner, single member LLC. And this is the multi-member LLC. So more than one, two or more partners that own an LLC can become a partnership tax treated entity. So that is the form 1065. 1065 is the tax form to file your partnership tax return. Remember, single member LLC, sole proprietorship businesses, they all file within the personal tax realm of 1040 in your 1040 personal 1040 form. Multi-member LLCs file a completely separate tax return, and that is 1065 partnership tax return. So that is a different tax return altogether from your personal.
Okay, so you mentioned a little bit about the differences between single and multi-member. Can you tell us about the pros and cons of filing this 1065 partnership?
Yes, some pros will be that partnership tax return can be quite flexible in its nature. It's not rigid. What I mean by that is when you have multitude of partners, the different partners can have and take different positions. For instance, you and I are a partner, and we own a business. I'm the person running around sweating and getting the business up and running. And maybe you are not, but instead you bring, you help with the finance, and you bring investment in to the business, and you provide capital to the business. And so I become an active member, and then you don't do anything, and you just provide some capital, and you become passive. And what that does is when we do taxes, it gives flexibility in the sense that only I would have to pay self-employment tax, and you don't have to, because you're a passive member, you're a passive owner of the LLC. So it gives you that kind of flexibility. Another thing is that because it's a flow-through business, meaning everything that goes into the partnership flows down to your personal tax return. If you have a loss, you can offset your other income you have in your personal taxes and get refund. So that would be some more pros of this partnership. However, let's say we're all both active. Then the con then becomes that we both will have to pay self-employment tax, which is 15% additional to what we would just have to pay with our income tax bracket and our personal tax return. So that would be a con. Each owner is also responsible, equally responsible for debt and loss and liable for debts and actions of your partner. And that might not be fair to some people, but that is a responsibility that you have to share as a partnership entity. So just keep that in mind.
Thank you, Dan. So I hear a bit about elections in terms of you can kind of change the way that you're taxed as a company. Can you tell me a bit about that and if I'm able to elect every year?
Yes. This is a very good question, actually. And I want to go ahead and mention upfront, the election is an election for tax treatment, not your legal entity structure. So if you're a LLC, your name, your legal name, and your legal structure is always going to be LLC, always going to be. If you're a corporation in your legal structure, you will forever and always be a corporation. However, here, when we're talking about election, just because you're an LLC, okay, doesn't mean you always will have to be a single member LLC or a multi-member LLC and filing taxes as a partnership, right? You can change it. That is what an election is. It's a tax treatment change to be whatever you'd like. So you can change it to be a C corporation. You can change it to be a S corporation. And that's why election is very useful. And as long as you find a good CPA and that knows what they're doing, they can give you the proper proposal on your entity structure change and do an election for you with the IRS. Okay, but now here the second question is, can I elect? Can I elect every year? The answer is no. For practical reasons. IRS really would be a mess if they would have to deal with so many people's elections every year. I'm sure that's the reasoning behind this rule, but it's a 5-year rule. You just have to remember it's a 5-year rule. So how that would work is that, let's say I created an LLC, I call it DK LLC. And this DK LLC, by nature, let's say it's a single member LLC because it's me and myself. I'm the only person owning the LLC. And I can automatically do my first election. It doesn't matter. I don't need to wait 5 years, right? So I can just do my first election anytime. I can make it a C Corp, I can make it an S Corp, and I can do that election. However, once I've made that first election, I have to wait 5 years. So that's the 5-year rule, and that's how it works. So you can change it. That's what election can do for you.
Okay, so say I have an LLC then, and I want to elect, what are the different corporation types that I can change it to?
Yes, like earlier I mentioned, you can elect it to be S Corp. You can elect it to be a C Corp, and you can elect it to whatever you like to be, as long as it's never been done before, let's say, and or you wait 5 years after you've done your last election. So that's the IRS rule.
Okay, so who creates the most partnership businesses?
Yeah, so partnership businesses, like I said, are people typically who are first starting off their business venture. Right now, we're in a recession, right? And when times get tough, people can come together to reduce a little bit of the risk, reduce a little bit of the burden, financial burden, by coming together and forming a partnership and bringing capital together to do a joint venture. So those are the people that would like to come and do partnerships. And also they like this because typically in starting a new business, you pour in more capital than what you make, right? So you'll have losses. So partnership is a great business to start because those losses, like I mentioned earlier in the pros and cons, can flow down to your personal tax return to offset your other income that you might have or your spouse may bring in or whatever. And so you can generate more refund to maybe put back into the business. But that's typically what you would see those wanting to create partnership businesses.
Okay, so let's talk about corporations then. You already mentioned that S corporation and C corporations are two that are
Yes.
very common. So what are the differences between the S corp and an LLC?
All right, so I want to paint a picture here for everybody. There is this business growth chart, I like to call it. When you first start, you're a baby. What are you? You're a sole proprietor business, sole proprietorship business. You do everything under your social. You didn't really formally create an LLC. You didn't have that because you didn't think you had much risk, those type of things. Then a step above that, you'll have your LLCs. Your LLCs can be a single member LLC or a partnership LLC, multi-member LLC, but that's the next step. That's maybe like we can call it a teenager. Then S corporation can be the next step above that, and that would be like your college kid, right? And so S corporation is similar to an LLC in that it is a flow-through entity. I mentioned flow-through entity earlier. Anything that falls in and is remaining as a profit or as a loss flows down to your personal taxes. That's a flow-through entity. S corp works just like that. Any kind of income and then expense, and then your profit or your loss at the bottom line flows down to your personal taxes. So it's similar with the LLC in that nature. However, because of the name corporation, it's different. So as corporation, a lot of people mistaken by thinking it's stands for small corporation, but it's actually a subchapter C corporation. So it is a loophole created by IRS so that people, smaller businesses, right, can assume this entity structure to reap the benefit of, taking that loss in and offsetting their personal taxes to generate more refund. And it's also created so that you don't get taxed like the big C corporation, right? So finishing that painting earlier that we started, that S corporation is like your college kid, and C corporation is your grown child that's married and files his own taxes, and they do everything completely separate from you. S corporation is still tied to your personal, okay? But the benefit, which I'll get to here soon, of this S corporation is that S corporation does not pay self-employment tax. That's the big 15% we mentioned about with the LLC partnership tax returns. We talked about with the sole proprietor Schedule C tax returns, and you don't have to pay for the 15%. Okay, and generally, S corporation is exempt from federal income tax other than tax on certain capital gains and passive income. And because it's a smaller corporation, there is some limitations, like you can't have more than 100 shareholders under one class of stock. Okay, and shareholders are individuals, and they have to be residents and not non-resident aliens, and that are going to be owning this S corporation. So S corporation, I would say, when I said LLC is not rigid, S corp is quite rigid. And then we can talk more a little bit about that. We're talking about pros and cons, but okay. So here's the pros and cons, right? So pros and cons of S corporation. Tax savings, I mentioned earlier, that self-employment tax, you don't have to pay it because you're a corporation. Is also not taxed like at the corporate level, like a C corp. It is taxed at your personal tax, level, and so there can be tax savings related to S corporation, and personal assets and business ones are separated when it comes to business liability, and it's easy to transfer ownership. So S corp has those pros. Cons: less flexible, super rigid. If you make a mistake with your tax return, because S corp is a loophole created for you and granted to you by the IRS, they can also take it away from you. So that is a con. They can, determine if it's no longer suitable, and they can send you a letter. And I've seen those letters being received by certain new clients of ours and coming with I got this letter, I don't know why I got it, and it's because they didn't meet certain tax obligations. For instance, one being like payroll, right? S corporation requires you to have payroll, and if you don't have payroll, and the IRS will say, oh, no, S corp needs to have payroll, and you didn't have payroll, okay, I'm gonna take this S corp status away, and so they can do that to you. So just remember, S corp, it can give you a substantial tax savings, but it is quite rigid, and it can be difficult to maintain. It is also an entity you really need to have a CPA or a tax professional help you. And that's something that you can maintain on your own because there are so many restrictions and obligations when it comes to taxes.
All right. So when you're talking about the rigidness of the S corporation, is that the same with the C corporation, or what are some of those biggest differences between those two types?
Yes. So we have the two, right? The S corp and then the C corp. C corp is the most mature type of business, and S corp is not. And when we talked about the two, I mentioned S corp stands for subchapter C corporation. We coined something in our firm to help demonstrate the characteristic of an S corp and the C corp. So let me explain. S, we call it at Community CPA, stands for socialism. And C stands for capitalism. So socialism, like its characteristic, everyone is treated the same. In S corporation, when you have an S corporation, you better have a good reason as to why you are treated differently than someone else. For instance, I'm just going to throw a random example. You bought yourself a car. You're the owner. You needed a new car. It was time for one. You got one. Then you try to deduct it. IRS will ask you, hey, why did you get yourself a car? Did you get Susie a car, which happens to be your employee? And you're going, oh, no, Susie didn't need a car. And they'll say, why not? Because you and Susie are the same. You're an S-Corp, everybody needs to reap the same benefit. Get it? So socialism. Everyone is treated the same under the sun, and it is everyone's equal right to be treated the same under S corporations. So you have to remember, S corp is quite rigid. And if you really want to separate yourself to reap the benefit of being an owner, you shouldn't be an S corp anymore. You need to be a C corp. So C corp is like your large corporations. It's like your Microsoft, Apple, Wells Fargo, all these huge corporations, they're all C corps. And the biggest benefit of C corp is that it's flexible. C corp is as flexible as it'll come, because remember, C corp sits at the most matured state of the growth chart. Hence, IRS assumes that you have a CPA, that you know what you're doing, that you have all the proper documentation to back up all the things that you're putting into place. For instance, I want to get a car. I want to get a new house. I want a nice retirement plan. I want my business to pay for my child's education, my education, my top tier manager's education, blah, 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 blah. All these benefits are feasible and non-questionable by the IRS typically. So C corporation gives you that flexibility, gives you that benefit of the doubt by the IRS, because they assume you know what you're doing, that you have everything in place, and that gives you that flexibility that S corp doesn't have as a C corp. So that being said, S corp is a flow-through entity. C corp is not. Remember, it's a grown child. They're responsible for their own taxes and responsible for their own tax payments and everything else. So it is completely separate. You and the business are completely separate. You can file your business and personal completely separate and independent from each other. Absolutely okay as a C corp. So I hope that gives you like the difference between the S corp and the C corp. But yes,
Yeah, absolutely.
that is, yeah, the main big differences.
Awesome. Okay, so then when people are thinking about this, then what are some of the pros and cons? You gave a good outline of what a C corporation is. How do they know when they're ready, and what are some of the cons of this type of corporation?
Yes, pros are owners are separate from legal liability, so they're not entirely responsible when faced with legal issues or debt. You can have the ability to sell stock, which raises the likelihood of acquiring financial capital. You know, well-established structure with clearly defined roles, accountabilities and agendas. Employees may have options to buy stock at a fixed price and receive stock benefits. And so the pros go on and on and on. Some cons, maybe that as a most matured entity type, there's some more paperwork to be done. There are, more regulations. Most common people know this, and they'll ask us about this when we suggest them to be a C Corp, is double taxation, where both the corporation's profit and the stockholders paid dividends are taxed. Those are some pros and cons of a C corporation. But usually when we typically advise our clients to be a C corporation is because the pros typically outweigh the cons because of its flexible nature, because of how you can create and have a meeting saying that you'd like to have the company reimburse you for such activities, or purchase these properties to really help bolster the business and be able to write it off without IRS flagging a bunch of things. So C corporation, in its nature and in its activity wheelhouse, has those things as a common occurrence. So IRS wouldn't flag those, and so would give you that kind of flexibility. So it's a very good tool to have. But every entity structure, I would say, is useful as long as you use it right. So you just want to consult a tax professional before creating a company.
Absolutely.
It's like having a proper house for your business, and it's an important part of making sure you save on taxes and reduce audit chances, reduce legal ramifications, those type of things. So all of these are important and can be useful as long as you're at that stage in your business to appropriately have such entity type. So I hope that was helpful in answering a lot of your questions and questions that our participants may have today.
Yeah, thank you so much, Dan, for all this great information. So if anybody has any follow-up questions or would like a consultation, the best place to actually go is on our website, communitycpa.com. If you go to the appointments tab at the top, you can book an appointment with Dan to get this sort of one-on-one personalized consultation, where he'll go specifically into the business and what your options are in terms of creating and forming your business. So Dan, thank you again for sharing today. And I think this concludes the webinar. If you have any questions, I think you can advance the slide, Dan. You can go ahead and reach out directly to me, Catherine at communitycpa.com. And again, our firm is open Monday through Saturday, 8:30 a.m. to 5:30 p.m. Central Time. So we're able to help you both in person and online. So please reach out to us if you have any further questions, and we'll conclude for today. Thank you everyone for joining. We'll see you next time.
Thank you. I'll see you.